Welcome subscribers to the Saturday Summary for March 22nd of 2014, your weekly summary of market and economic news for annuity and life insurance professionals. Once again, I'm Jonathan Illig of Brokers Alliance, in here for the biz. Okay. Now, the markets and indexes end a volatile week with gains of about 1.5%. Now, the bubble remains effectively unchanged year to date, as we can see here. And as we also see here, the S&P is positive by about 0.088%. The Dow Jones Industrial Average is still down for the year by about 1.86. Now, the markets continue to largely ignore the credit bubble problems in China, the not over yet crisis in the Ukraine, and are focused this week upon pretty much a good U.S. manufacturing report, which kept the broad indexes slightly in positive territory for 2014, with the exception of the Dow Jones Industrial Average. Now, the fallout from the Ukrainian crisis is not yet over and may not yet have really been felt, as the U.S. administration and, to a lesser extent, European governments seem intent on finding ways to punish Russia economically. Of interest, it was reported on Friday that SEC attorneys were in contact with large mutual fund managers to encourage them to disclose fund holdings of Russian stocks and to issue warnings to their investors about the risk of those stocks. On that note, the Moscow exchange, the MICEX, has lost about 10% so far this month. Now, Wednesday was the conclusion of the first Federal Open Market Committee meeting chaired by Janet Yellen, who, at the post-meeting press conference, confirmed the Fed's commitment to ending the quantitative easing, or QE, stimulus program for the big investment banks. The Fed announced another $10 billion monthly reduction in QE, reducing bond purchases from primary dealers, that is the big banks, to a mere $55 billion per month, with the program expected to be over in October. But that announcement did not spook the markets, but one of Ms. Yellen's statements in response to a question did. I call it the quote heard round the world. The question posed was to the effect of how long after the end of the QE stimulus would the Fed begin raising the federal funds rate? Her response was, well, you know, this is the kind of thing it's hard to define, but, you know, probably means on the order of around 6 months or that type of thing, where investors took this as setting a date of early 2015 for the rate hike, and the broad indexes dropped 0.5% or more over the course of the next couple hours. Of course, they recovered by the end of the week, as prognosticators and analysts assumed that Ms. Yellen had misspoken, calling it a rookie mistake. Well, perhaps the chairperson did misspeak, or perhaps not. Some pundits opined that it was an intentional kind of prick at the stock financial bubble. Now, of note that on Friday, James Bullard, the president of the Dallas Federal Reserve Bank, said that the 6 months comment was right in line with what he had seen when economist polls and things of that nature. So, something to think about. Now, I agree with the comments made by market watcher Jeff Cooper, who, in writing on Minionville on Friday, said, if the market and the economy are so strong, why does the notion that rates may rise one day more than a year out cause a 2-hour, 200-point smashola on the Dow Jones? Well, it's a good point, and therein lies both the lesson of this week and the conundrum facing retirees and pre-retirees, which is, at what point do the prospects of potentially more gains in the market justify the increasing level of risk? Well, only individuals can answer this question for themselves, but as our subscribers know, many of us here believe very strongly that it's time for those, especially those within 5 years of retirement, to get out of some risk, get some of it off the table and into financial tools that will protect their savings and guarantee future retirement income, no matter which way the markets go. Now, to help answer this dilemma for those nearing retirement and recently retired, the other question is also whether or not you have saved enough for retirement to provide for the income you need and want. Now, at Brokers Alliance, we see situations every day where, based upon our unique income architect retirement income analysis method, clients are taking more risks than they really need to in order to make it through retirement. Now, isn't making sure you have enough retirement savings to provide the income you need the reason we're taking risk? Well, do you know if you have enough? Do you know if you really need to keep all of your assets in the risk markets? Well, if you're within 5 years of retirement, our method will reveal your potential retirement income gaps and determine if your savings are enough. Now, moving on, here's one of this week's quotes to share with clients. This is from Richard Fisher, the ubiquitous president of the Federal Reserve Bank of Dallas, who said on Friday, QE, that is the stimulus, was a massive gift intended to boost wealth. I say to Mr. Fisher, careful, sir. Speaking the truth can cause one trouble. Finally, be sure to read the article at page 4 titled, 5 Reasons the Market Must Fall. Now, this is going to be published in the April 7th print edition of Fortune magazine, and of course it's already hitting the .com wires this week. And I think it is the best and most concise summary of conditions that I've seen in a long time. In short, The 5 reasons are: beware the aging bull, prices, that is, prices of stocks are ahead of corporate earnings. Item 3, stubbornly sluggish economy. Reason 4, fewer stocks are reaching new highs. And finally, number 5, too many people think it's a good time to buy. So that's all I have for today. Be sure and check out the written summary for a lot more information. Now, if you want something covered in the summary, have comments, please contact me at the email address scrolling along the bottom of your video player. If you're in the business and you want a better quality of true support in your life and annuity practice, more than just products, okay, contact us here at Brokers Alliance. Well, that's your Saturday summary for Saturday, March 22nd of 2014. Thank you for joining us. We look forward to seeing you next Saturday. Have a great week.